Good morning and welcome to the market forecast. Today is Wednesday, August the 11th, the day after my son's birthday. We had a nice time out last night. My name's John Hoagland. As always, thanks for trusting me with your time. We're going to be looking for accurate context, good risk management, and patience as we do every day here. Hopefully, with the CPI release, we've been able to stay patient, maybe find a way to make a little bit of money on that. The CPI came out this morning. Core CPI was they were looking for 4.4%. Came out a little bit lower than that, 0.3%. Now remember that does not include energy and food. So there's going to be some digestion going on with how the market is going to finish up the day, I think, with this information as it digests throughout the day. The talk of the town apparently this morning is the infrastructure deal. I guess it has passed and is going to the House for approval. Also, they're looking forward to moving the $3.5 trillion spending plan ahead as well. We've got 90% of our earnings for earnings season already out. So we're about done with earnings. We are featuring eBay at the end of the session today. So all you buyers and sellers out there that use eBay, and if you're a eBay investor, you'll be, I'm sure, looking forward to seeing that this afternoon. Crude prices have mostly held an important level this morning after the CPI came out. We took a little dip below that weekly kickoff low at 67 even. Last night, the API reported a 118,000 barrel draw last week. Apparently, there's some thought that the demand here in the U.S. is stronger than expected, while demand in China continues to fall off as they combat the coronavirus. The EIA is expecting a 1.27 million 930. Looking forward to seeing how the market is holding positions. I know, I guess I am frozen a little bit here. I'm hoping to be all right now. Should be back on. My apologies. Better. Excellent. All right. Sorry about that. So I was talking about holding positions into major economic releases. I've had my share of big positions into major economic releases, and if I total everything out of all of the things that I've done into economic releases, I think I'm about even. I've had some wildly successful days and some terrible days. I just don't do it anymore. I lost a lot of hair, got a lot of gray hair from doing that, and I just don't see that it's worth it. So I'm going to be looking to respond to how these markets act as the day goes on with respect to the economic data that came out today as far as the CPI is concerned. As always, make sure you like, share, comment, question, feedback, and heckle. Subscribe to our YouTube channel so you can get notifications when we do go live. I apologize for my brief technical difficulty there. I believe I've got it taken care of, and I have to say good morning to everybody. Tone, good morning first in the room. You win the prize. Brian, Jorg, good morning. Theo, good morning. Milo, Brett, good morning. Bill, Jim, Murph, good morning. Mobar, I was looking at this question earlier. We are in the process of revamping our swing trading combine. I'm sure that you will be notified when that is available for you. Steve M, Laura, good morning. Joe, the future scalper, good morning. Stacking bananas with us. Tanya, good morning. Ryan Williams, George, Mo Guitar, Jason, doing the combine currently. Is there any way I can get the 30-minute chart template with the profile that you use on TS Trader? I can't send you the profile, but I can show you how to set them up. I'm hoping we're going to have a little bit of time at the end here where I can help you do that. Another way you can find out about that, Jason, is if you come to the group coaching session today at 1 o'clock Central Time. I just put the link in. You can join there. But if I get some time here at the end of the forecast, I'll certainly show you how to set that up for yourself. Good morning, Greg, Cyril, Drones, JD. Good morning. Happy belated to Luke. Yes, Fred. Crude oil has opened above the island gap, which Hope pointed out in the market recap last night. I'm looking at the top of the gap. It's 67.13 as support. Nice work. Nice work, boy. We really took that dive down just before the open. And yes, we have left that island bottom intact. So that's going to be interesting. Thanks for pointing that out, Fred. Vince, good morning. KM, Stacking Bananas. Nelson, James, good morning. Nick Ends, Juan, good morning. Frederico. Jason, yeah, sorry about the technical difficulty there, ladies and gentlemen. Juan, Nelson, Toadman Extra, good morning. Lost hair. I did. I lost a lot of hair. Jason, Buenos Wednesday, JB, and Nick Ends. Scott Matson, good to see you as well. All right. I think we're ready. Let's jump into the charts here. Let's take a quick look at what we're seeing, as always, starting with the daily in crude. Let's take a look. So we know that we're looking at the EIA at 9:30 this morning. So we may be a little bit muted as far as opportunities until then. We do have some information coming out. We did leave that island bottom. We'll point that out here as soon as we get to the 30-minute chart. Seems as though the market is seeking to find some sort of balance. We have to remember we do have that island bottom left from a couple of days ago. Open interest indicates short covering yesterday. All right, well, we had the big up move. We lost 37,000 in open interest, but we also have to remember we are in rollover. Sometime early next week, we will be moving to the October crude oil contract, which is going to blur volume and open interest until expiration. It's one of the things about crude oil that makes it so fun and interesting is we have a rollover every month that just helps blur some of the information that we look at for our opportunities. EIA 930 looking for a 1.27 million barrel draw after about an 800,000 draw from the API last night. Maybe the demand is a little bit more than we think it is, at least for now. Take a look at the 30-minute chart. So, well, here, let's go back here. We gapped lower. Okay, this was Monday. Friday to Monday, we gapped. Monday to Tuesday, we gapped. We just traded down to it, but we didn't do it in the regular trading hour session. The market has opened, leaving the gap regular trading hours to regular trading hours, which is, of course, very interesting to me. This 67 even is weekly kickoff low. It was opened basically the week down below it. We've rejected this area, at least for now. If we come back and re-accept this area, we do have a naked point of control down below, which is remaining a visual target for the downside. This 67 even is, again, an interesting area for me. I'm not all that pleased that the market knee-jerked down through there before the open. So it does, however, offer us an opportunity for a cheap execution, really in either direction. If you're looking for longs, you don't want the market to get too deep beyond that 67. If you're looking for shorts, let the market come through it, come back to it before looking to enter into that trade. The market's open. I'm not sure if the opening range is either the high or the low right now, but we are seeing an opportunity right there, right now. It's almost like I want to stay here and watch what happens. Because our overnight prior to that was 67.04. Within 4 ticks of it, we got pretty deep past it on the knee jerk. We traded just now right to it which is what we're looking for this to do. Is if we're going to be looking for longs here, we want to get as close to that level as possible, and we want our risk to be just the other side of that support level. We'll see if this holds out. So far, looking like a relatively supportive level. Again, if we took this long and we were pretty close to that 67 even, we've got a little bit of space down below here with which to manage the risk. We'll see if this plays out. We may come back to the crude oil today to see how this is playing out. All right, the E-mini S&Ps. The CPI, always when there's a 730 number, if I'm working on my notes for the forecast and my notes for the trading day, sometimes things change and change rapidly. That's the, excuse me, that's the thing about futures. That's the thing about trading. It's all about change. Fred, you noticing the P-shaped profile from the short covering day yesterday in the crude oil. Very good vision, Fred. It's nice to have you back with us. The question is always, what direction is the market attempting to do or go, if anything, and how good of a job is it doing getting there? All right. So yesterday we put in a new all-time high. Not a whole lot of decision in these doji-like bars, daily bars. We did add a little bit of volume on the upside yesterday. We added approximately 4,100 in open interest on this move to the upside. So it's still indicating that the market is bringing money into the upside momentum. What the question is, we need new business in regular trading hours to continue this move to the upside. Okay. You need those new upside participants, but never discount the resiliency of the U.S. equities markets. Everybody has been wondering when we're going to get the big pullback. When is this all going to happen? It's going to happen when we give up on it. When everybody just capitulates and say, all right, well, we're all in long. That's when we're going to get the pullback, and we have not seen that really happen. I mean, we've had some pullbacks, of course. I know everybody is always thinking at all-time highs. Well, it can't go any further. Well, it most certainly can. Never discount the resiliency of these markets. All right, so here we go. Before the number, we were trading with a little bit of short overnight inventory. We were probably going to be opening in range and in value. That has now changed. We have become directional to the upside. We are one-time framing higher. We're not even open yet. We've put in a new all-time high in the extended trading hour session, and we all know that the regular trading hour session traders don't like that. I don't know if it's an ego thing, but rarely do we leave an all-time high in the extended trading hour session. Maybe it's not going to happen today. Maybe it is, but the way this market is responding to CPI right now, it seems as though we are, bringing in some buyers here. Are they short? Are these short time frame shorts getting out? It's entirely possible. It seems the short time frame traders are always looking to trade the short side because we're always looking for the big move to the downside, which sometimes never seems to come. So we're knee-jerking out here. We are going to be seeing if we continue this move to the upside in regular trading hours. If this is short time frame traders that were maybe too short or are deciding to get in long here, and we don't bring in the new business that we are looking for to continue this move to the upside, an opposite move is pretty much likely. There's always that probability. The probabilities come and go, but I'm going to be watching the open. We're going to be opening probably with a gap. And we're going to run those gap rules. If we can't close the gap relatively early, I realize that's a subjective term, but if we can't close the gap relatively early, we're looking for opportunities to continue to see this market move to the upside. I do not want to fight this without some sort of structure, and one of the structures I'll be using is the hull moving averages. We start to see price below those hulls and they start to turn over. That may be an indication that the upside momentum is falling off. But again, because we are in new territory, I'll be looking for opportunities in the opposite direction with very reasonable profit targets until proven wrong. All right, let's do the Nasdaq now. All right, so the Nasdaq has been having a little bit more trouble with the upside move. We're always thinking about, okay, the market is trying to move higher, but how good of a job is it doing getting there? What is the performance? What does it need? It needs new business. It needs new buyers to come into this market and move it to the upside. Whether those new buyers are longer time frame, medium time frame, or shorter time frame, these are going to be new positions coming in to push price higher. We did add 4,600 in open interest, but in the opposite direction yesterday. Do we have some sellers in here? Or is our momentum falling off? It seems as though the market is not, maybe not the S&Ps, but at least the Nasdaq. We haven't put in a new high. All week. We've been kind of coming off. We've been putting up lower highs and lower lows. The Nasdaq is telling a different story than the S&Ps. Where's the fish? That's the question. All right. So here's our all-time high. It was in regular trading hours, I believe. We're really just kind of holding here, trying to continue the move to the upside. We moved value higher from Monday to Friday to Monday, Tuesday, Wednesday. We moved value lower on Tuesday. We're attempting to bring value back higher. We can see that we've got a move that was maybe some overnight shorts, but we're still in range, just barely outside of value. In the S&Ps right now, we're screaming at all new all-time highs. It's not happening here. What is that telling us? Well, the Nasdaq seems to be struggling to the upside a little bit more than the S&Ps. Yesterday, adding 4,600, this almost looks more like a long liquidation. We should have lost open interest. Instead, it's telling us that we gained open interest on a down day. Is that sellers coming into this market, and are they short time frame? We don't know. So I'm going to be looking at opportunities probably. I'll be watching the opening range trade in the equities today. That first minute of trade may be indicative of buyer or seller control right off the open. If we leave the opening range at the low, that may be telling us that buyers are in control and we want to join them. Leave the opening range at the high and the market starts moving lower. It may be telling us that the sellers are in control, at least early in the session. It may give us an opportunity to join them to take that move lower. We don't really have a lot of overnight inventory that I'm going to trust here. I'm going to be patient in the Nasdaq because, again, we are in range, but a little bit out of balance, out of the value area. We talked a little bit yesterday about how these markets, when they become directional, become value-driven instead of momentum-driven. And certainly in the Nasdaq, the market is struggling to keep the upside momentum, at least to this point. Gold. Gold has been a strange market of late. The digestive hangover day yesterday did play out. Very low volume. We added less than 100 in open interest all day yesterday in gold. It was pretty much a nothing day. We had that big move to the downside on Monday that occurred in the overnight session. I believe that there was a little bit of lack of liquidity that helped this market get to this level. I think it was a little bit overdone, and it's certainly showing some pretty serious rejection on the daytime frame chart. The market moving to the upside. I would love another test of weekly kickoff low here, which is 1754, to see if we can get a good amount of fish pulled into the boat up there, but we have to wait and see if that's going to happen. So we're in the process of rejecting this pretty deep spike to the downside. 30-minute chart. Ooh. All right, settlement here. Obviously, 7:30 number came out. All the markets seemed to like that. You just kind of jumped to the upside. The the 10-year yield dropped to about 1.35. It wasn't a big drop, and it's not too far off of where it settled yesterday. The dollar dropped before the open, before the forecast here. It was 92.89, back down below that 93 level, and the VIX dropped to 16.51. If I forgot to do that beforehand, so gold really just kind of knee jerking. It seems like a kind of a crapshoot here in gold. We've opened with a gap. If we can't close the gap, I'll look for a test of weekly kickoff low, which is again here at 1754. But again, there's a lot of digestion that's going to go on with the numbers that came out today. We know we have jobless claims tomorrow, so to be patient. I think a lot of what's going to happen today is going to happen as the day goes on. I think we're going to find better trade locations if we stay a little bit patient in most of these markets today. The 30-minute chart, again, we've got a little bit of a gap to the upside. Gap rules, gap rules. Euro. All right, so just like gold, and everything else, we got a little pop to the upside in the euro. Downside volume has slowed. We see that the volume is kind of dropping off as we continue to move to the downside. We did continue to add open interest to the downside, so that indicates that there's still some interest in moving this market lower, indicating some new business down below this weekly kickoff low. Beware of the vicious contrary move. We've gone from here pretty much straight down to our low from yesterday. If we start to get some shorts that might be a little bit nervous, which might happen here at this weekly kickoff low, which is 117.45. It's kind of funny. Gold is 17.54. Euro is 17.45. Interesting. Let's take a look at the 30 and see what we see here, and then we'll move on to the 10-year. And so the knee jerk to the upside, opening with a gap. It looks as though the gap was closed to the tick. So now it becomes a support level until we start to see some possible acceptance inside yesterday's range and value. We're getting our test here of 1745. We have already traded up to the previous naked point of control from Monday. We don't really have a lot of points of control above to speak of. There was a relatively organized. We got one way up there. So this is a kind of a pivotal area. If you're going short below or long above, be careful with that. It might become a situation like this where it becomes somewhat magnetic. So be careful with that. Take a look at the 10-year. All right, so the overnight failed to pick up the weekly kickoff low. We can see volume overall has been dropping as price has been dropping. Yields kind of rising a little bit, but we're starting to cut off the volume to the downside, and we lost 14,000 in open interest on this move to the downside. This trend line here I'm viewing as kind of a stage one of a potential market state break to the upside. A confirmation of that would be acceptance below the weekly kickoff low, which we rejected in the overnight. We had a pretty deep knee jerk to the upside here as the CPI came out. This could have been quite as simple as an overnight inventory. We got a little bit too short here in the overnight. The number came out and brought us right back into range and value. Stay patient in the 10-year this morning. All right, so my friend Jason, when you put a profile on, I'm just going to put a profile on here. It's in drawing tools. Click the profile. Don't drag it. Just click it, and then add it to your chart where you want the time to start and where you want it to end. This is going to populate over here because this is going to continue to populate. as long as I let it. Okay, at the end of the day, I'll move this right over here one, and that's going to keep that profile for me to make it look like this. Okay, I'm just going to double left click on the profile itself, and I'm going to bring this up. So the profile color and the background color, I have both as kind of a lighter blue and a darker blue. Okay, the value lines, you can choose your color here, point of control line here. Okay, I've got red here for my points of control. Make sure you enable them, and you can thicken the lines themselves. They can be very small or they can be very thick lines. Make sure they're enabled. 70% for the value area, and you want your value area to be a different color. We've got the profile color as blue. We want the value area color as red. Save it as default, and then save it so that every time you add another profile, it's going to look like this. And you can choose your own colors and everything. All right, Jason, I just wanted to give you a brief overview of that. If you do have more questions about that, please join me for the group coaching at 1 o'clock. I know we're scheduled to have market therapy today at 3:15. I know the doctor said he has something that he had to wait till last night to find out if he was going to be able to make it or not. Still waiting to hear from him, so I'm assuming we're still on. If something changes, I'll cancel today's session and you'll get an email to let you know that it's not going to happen. I'm really hoping that it does, and I know the doctor is looking forward to being with us. Unfortunately, this is one of the things that you cannot avoid. So I'm assuming he's going to be here. He did not email me last night to say he wasn't going to be. I'm hoping everything is okay, and I'm hoping that we see him today at 3:15 for market therapy. All right? So let's see here. Yes, let's make some money today. All right, so take your deep breath. I've got about 20 seconds. Here's the link for market therapy. Sorry about that. Here, let me put it in here. And again, hopefully the good doctor will be able to join us today. We're going to be revisiting a very important subject in goals. Goals are very difficult and very important in trading. The right goals are very important. Get out there, profit, stay humble, grateful, and creative in your trading today. You should see Dan for the market recap today. If not, you might see me again. Dan had something to do yesterday, but hopefully he'll be with us again today. And again, I'll be looking forward to group coaching and hopefully market therapy today.